Getting student loans, mistake number 6, not understanding the system. As I said before, getting college financing is not rocket science. You can get the money for school and pay for college with your student loans or grants for college and do the work all by yourself. But there are 2 requirements. Number 1, you need to understand the system, and number 2, you need to know your options. One of the biggest mistakes families make is they try to get the college money for themselves without fulfilling either of these requirements. We're not going to touch on the second requirement, knowing all your options. That's because everyone's case is different and it gets pretty complicated. Also, I don't know all the options. I'm not a college planner. I know why my child's education in a top private school is costing me about $3,000 a year, and I have everything in place to get a similar deal with my 16-year-old when the time comes. But my situation is unique. It probably will not apply to you. And since I'm not a college planner, I can't tell you your options. But I can help you with the first requirement, which is knowing how the system works. First, you need to understand how schools calculate financial need. There are 74 factors that are weighed out for the average family. These include income, assets, age of the oldest parent, and a bunch of other things, and the actual formula prints out to about 36 pages. After this process, a number generally called your expected family contribution, or the EFC. This is how much you're expected to pay out of pocket for your college education. Each school will take your accepted family contribution and subtract it from the estimated cost of attendance for that school. And that number, the difference, will be your financial need. Now, I'm simplifying this a bit because I want it to be clear, but so let me give you a specific example. The main source of financial federal student loans is from the FAFSA. They use a 156 questionnaire form to get your EFC. Making a mistake on this form can cost you a ton of money. So what percentage of parents do you think fill out the form make a mistake? Well, I can't tell you that. In fact, nobody can tell you that, because 10 years ago, the government stopped releasing this information to the public. The number was too embarrassing. At that time, 89% of the forms submitted had errors, and those errors were significant. For example, you need to enter your annual income in a few times in the form. But if you enter your income on the wrong line, you end up reporting you make twice as much money as you actually earn. Mistakes like that bump up your expected family contribution and make it you lose money for school that you should be getting. On the average, 80% of parents make mistakes that bump up their EFC by at least $1,000. That's the basics formula. Your financial need is the difference between the cost of attending the school minus your expected contribution. This is where it gets really interesting. There are 163 things you can do to lower your EFC. You don't need to know all 163. You need to know about 4 or 5 of them which are relevant to your situation. That's why the fact that I have the cost of my kids' education down to $3,000 a year is completely irrelevant to you. My 4 or 5 things are different than yours, and I can't tell you what your 4 or 5 things are because I'm not a college planner. This also explains why very good tax advice can be very, very bad college planning advice. So if your tax advisor tells you to put away money in a 529 plan so that you will save on taxes, you will definitely save on taxes, maybe 35%. But when it comes to getting college financing, you'll be penalized 100% on that money because it will be added to your EFC dollar for dollar. And that's why you need a good college planning specialist. He knows the ways to structure your case so he brings down your expected family contribution. You want to start the college planning process early too. You need the extra time to structure your financial situation to lower your EFC. If you start early and do this right, you can drop your EFC by 50 to 75%. And that means you should consult an experienced professional college planner as soon as your child enters high school. It's never too late, even if your child's already in college. But the earlier the better. So go right now to undergraduateloans.org, freeconsult.html. I've already arranged for you a free consultation with the leading expert that I recommend. And that means it will cost you nothing, and you can find out how much you can potentially save on college education.